Hi there, this is Chris from MoneyHub, and this video explains what Save My Bacon is. So we get a few queries around Save My Bacon like we do with a lot of other payday lenders. So the purpose of this video is just really looking at what the interest rates are, how to find out what the total cost of the borrowing is, and basically what you need to know, plus alternatives, and really having a good think about whether or not you need to do a payday loan. We know they are popular, but at the same time we just want to present as much useful information as we can to help people make an informed decision. So first of all, Save My Bacon, they've been going for quite a few years. They do it all online. You can find their website here under savemybacon.co.nz. What really matters, whilst you can see the amount of money that you can borrow and it'll give you a repayment schedule and the total cost of everything, what really matters is the interest costs as well as the fees. So the best way to jump into that is really to go down to the footer and have a look at the interest rates and fees so you properly understand exactly how they're charging you. So they've very much said that their small print is the big print and there's no surprises, but at the same time you do need to understand what you're going to be paying. So first of all, their interest rate is 49.95%. That works out to be about 0.138 or 137% per day, which pretty much is double what a credit card interest rate is. Credit cards are usually 20-25% per year. This is double that, but they also charge some fees, which I'll highlight shortly. So here you can see the loan amount is $2,000 to $5,000. They also provide longer term loans, but at those interest rates, you would argue that it is likely to be cheaper to go with a personal lender, but that is what it is. They've also got the government cap of 100%. So if you do borrow $2,000 and you can't repay it and something happens, the maximum that you have to repay, including all the fees, including all the interest, will be $4,000. Which is still a lot of money when you borrowed, say, $2,000, but that is, trying to limit the exposure or the risk to people that they previously had. So let's just have a look at their fees. You've got the establishment fee. This is what you need. So this is what will be added to your loan when you take out a balance. So that $150 is then you need to pay it back, but that will be added. If you took out, say, $2,000 loan, then $150 would be added on top of that, so you'd be paying back $2,150. There's also a $4 per month account fee. This is just for kind of managing your loan. We're not really sure why this is charged, but a lot of payday lenders or small sort of credit stretched lenders do charge this. So that's something just worth noting that that will also be added to your account. Those are the only two fees, which is quite helpful relative to where things used to be in the industry. And then if you don't repay the loan, there's a default fee of $30, and then and that'll be per time that you default. So if you miss a payment, that'll be $30 added on. If you make the payment later, that's fine. You won't have that payment reversed. But then if you miss another payment, say next month or like a few months later or whenever, then there'll be another $30 charge. If Save My Bacon does need to get into the debt collection, then there'll be a $40 fee to settle that up as well. So they are very clear with this. What our review really looks at is pretty much exactly what I've just gone over. So looking at the cost of the loans and what you'll pay, and then also looking at the fees here that are the $150, the $4, and the $30 and the $40 if you manage to miss a few payments or miss one payment. What are the repayment terms? So it really is looking at how often do I need to pay the money back. Usually it's weekly, because the lender, it's a debt which is largely seen as high risk, so they want to get the money back as soon as possible. So you will be needing to set up weekly repayments per their schedule. But the good news is that you don't get overcharged if you make early repayments or payments on top of what you already owe. That will help you lower the cost of the overall payday loan because you're paying less interest. So lots of questions around applying. The first comment is, please strongly consider whether or not you actually need a payday loan. And there's nothing too different between the different lenders, just the interest rates and the fees. But the problem is that payday loans do create a debt, reliance, and that you'll be, needing to possibly renew the debt later on, or pay it back, and then maybe you'll be short because you've been repaying the existing loan. So please think very carefully about whether or not you actually do need to go with a payday loan, because they are, debt traps in some regards. And a lot of people struggle to keep up with the repayments, even though they do look quite affordable when you see the calculator. What they'll look at is a whole bunch of things: whether or not you spend, what you spend your money on, how much is your surplus cash likely to be so you can make the repayments, what kind of debts you have, and what your payment history has been in the past. So we really want you to consider the alternatives to payday loans. I think that's really, really important, because you don't need to rush in. There is always an alternative to a payday loan. The first one is it possible to do a credit card withdrawal? That may be a situation where you've got a little bit of balance left on your credit card, but of course the interest rate on a credit card is most likely to be between 20 and 25%. So that's going to be half the price at least of the Save My Bacon rate. So that's an option there. You can also look at, while we don't advocate getting people into more debt, but still it is cheaper, the credit card limit. So something option there. It has become a little bit more difficult now with CFA, the government regulation, to keep extending credit card limits, and it does require a lot of form filling and some bank assessment. But it is worth just keeping in mind that may be an option. Plenty of middle income people take out payday loans. That's a reality. It's not a distressed people. It is just people trying to balance everything. So there's no shame in the fact. It's just we prefer to see less people, as few people as possible, taking out payday loans. Hence this video. Hence why we want to just explain what the options are. So consider a balance transfer credit card. That's also something which can move your debt to low interest or zero interest while you hopefully cut up the existing card and then repay the balance. That's not going to get you to any new money right away, so it's not going to be a money infusion like a payday loan would be, but at the same time you will save money on this sort of ongoing credit card debt, which can be realistically half the price of a payday loan in the case of Save My Bacon, for the for the same amount of problems it will create. You may be eligible for a personal loan. This is certainly an alternative from Save My Bacon, because they do promote long-term lending between 1 and 3 years, for example. So personal loan, we've got some information there around comparisons and what the interest rates are. So do look at that, because that is likely to be cheaper than the 49.95% which Save My Bacon currently charges. You could consider borrowing from family. That's something for you to carefully look at, and your family more than anyone else, so that could be an option. And at the same time also looking at the overdraft option for your bank account. That might also be something that you could look at. Often people are overdrawn, they have no money left on their credit card limit, so they go and get a payday loan, but not always. So make sure you look at all the options which we've suggested there before you take any further steps, because they're likely to be a much cheaper way to arrange some extra money. So just looking finally through the Save My Bacon site, just so you properly understand it, these are this is pretty much how it works. You look at the amount. It sounds a lot, but then it is going to jump out. So 130 weekly repayments. That's about that's about 1.5 years. So you can see that from the $2,000 that you borrow, you'll pay $1,800 and $66, so $1,866.20 back. So that makes it really expensive. Whilst it looks, friendly, this is just what debt costs, and that's why we're always going to suggest to people that they try and minimize it or try and look for alternatives which aren't like that. So look, they do have very positive reviews. I think the fact is they need to be like very client focused, because clients really are, the make or break of the business. But just have a look through the website in great detail before you go any further, because you just do want to be able to make sure that you understand what's being offered. So you can see here that they have largely the a bigger size of the market. They're looking at $2,000 to $5,000 loans, and that's just because that's where they see a value in providing. But as I said, the interest rate is around 50%, and so it could be much better to look for personal loans in that space if you can apply for them, because it's very rare that standard personal loans come to around 50%. So thanks very much for watching. Sorry, I'm losing my voice because I could talk about payday loans and the risks all day long, but just be very careful. They are into quick payment. They are into early repayment, which is good. What we do like is that the government has forced them not to be able to top up too readily, but at the same time, there is some option like around there. We don't love that because we prefer people to be out of debt as soon as possible. But it is worth noting that should you need to, roll the loan over or top it up and take it out, top it up and just, use the money for something else, then, that is an option. But, that does keep you in debt longer, as I've said. So, and then if you can't make the repayment, of course, they have a team there, but there are fees involved. So yeah, as I said, please be very careful. Whilst it looks a very friendly operation and things like that, you just need to be cautious that this is very expensive debt that comes across as looking very affordable. And okay, if I want $3,000, I'm just paying back $43 per month, per week. But the reality is, you're almost paying $3,000 to borrow $3,000. You're paying $2,600 to borrow $3,000. So very expensive by my book, and certainly something that needs a lot of management, once you've borrowed the money. So thanks very much for watching. Please leave any questions that you have down below in the comments. We promptly respond to these because we just want to make sure people understand exactly what they're doing with payday loans. Thanks so much.